Hello, this is Japanese Economic Review Channel. Today we analyze the March 2026 Tokyo CPI preliminary report. Tokyo's data is a critical leading indicator for national trends. This month, the headline inflation rate stands at 1.4% year-over-year. We will deconstruct this figure to understand the underlying mechanics driving Japan's current economy. The 1.4% headline figure masks a heavily bifurcated market. We are seeing a fierce tug-of-war. On one side, everyday realities like food and structural services exert strong upward pressure. Conversely, energy subsidies and volatile fresh produce prices are aggressively pulling the headline figure down. Looking at the macro baseline, a significant gap emerges. While headline inflation is 1.4%, the core index rose 1.7%. More tellingly, the core index climbed 2.3%. This 0.9-point spread exposes the massive deflationary distortion caused by current energy pricing, showing underlying inflation remains sticky. This chart illustrates our trajectory since the global commodity shocks. Tokyo inflation has steadily decelerated from the 3% peaks seen in 2023. The current state shows a flattening curve hovering around the 111 baseline index. This cooling into the 1.4% to 2.3% range indicates a stabilization of price momentum. Here we deconstruct the 1.4% net result. The largest upward driver is food excluding fresh produce, contributing plus 1.14 points. Housing adds plus 0.32 points. These are heavily offset by downward forces. Energy pulls the index down by minus 0.39 points, and fresh vegetables by minus 0.25 points. Zooming into upward drivers, specific items show extreme shocks. Coffee beans skyrocketed 62.4%, and chocolate 28.9%. Importantly, structural service costs are rising. Mobile phone charges increased 11.1%, sushi dining by 15.1%, and accommodations by 5.0%, providing a sustained lift to the broader index. Conversely, aggressive relief comes from three distinct areas. First, policy-driven utility drops. Electricity fell 8.2%, and city gas 9.6%. Second, weather-driven yields crashed cabbage prices by 46.5%. Finally, social policy interventions heavily reduced nursery school fees by 60.4%. Government intervention significantly masks true baseline costs. The estimated policy effect suppresses headline inflation by 0.30 points. This includes a 0.17-point reduction from electricity subsidies alone. Without this suppression, headline inflation would track closer to 1.7%, aligning tightly with the core index. Not all price shocks are created equal. While items like coffee see 60% plus spikes, true macroeconomic gravity lies in heavily weighted categories. The sheer mass of food, weighted at 2,760 out of 10,000, and housing at 2,529, dictates the macro reality far more than high volatility outlier items. Putting 2026 into a 50-year context reveals a significant shift. Following 2 decades of entrenched deflation and recent post-pandemic shocks that pushed inflation above 3%, we are now entering a phase of controlled stabilization at 1.4%. Japan has fundamentally transitioned away from the zero inflation era. Looking ahead, Tokyo preliminary data will continue to lead national figures by about a month. Notably, please mark August 28, 2026 on your calendars. This date brings a critical methodological update, switching the CPI calculations to the new 2025 base index standard. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.